recording as well. Today we're going over Euro USD and Euro JPY, just a little look over. This is the topics that we're going over today. All right, we basically presented it in here as well before the meeting. How to properly identify market structure on a micro and macro basis to help with trade execution timing. So basically going over micro and macro via different time frames and the structure. Differentiate candlesticks on a multi-time frame perspective to determine your trade entry. Which sessions present the best setups to give the most pips, and how to identify patterns in the markets that can predict specific outcomes with major accuracy. All right, let me know, you guys in the chats, if you guys are excited, if you guys want to hear more, if you guys want to see more live streams like this. We have various different live streams that I have pre-scheduled. So I believe in the next 2 days there's another one. All right, good to see you guys in here. Good to see you, Biju, Daniel, Christian Hernandez. Awesome, great to see you guys in here. Yoan. All right, let's get started. So we're looking at, right now, we're looking at Euro US dollar on a 1 hour time frame. Now, we're going to go over the previous week, what happened this previous week and the previous week. We were able to catch a nice move here on this nice move up the previous week. But the previous week here on Euro US dollar, we're going to actually go on the 15-minute time frame. It was actually a beautiful, beautiful structure, a beautiful setup, not only for a midweek reversal type setup, but also that Tuesday reversal as well that happens in the beginning of the week that we talk about a lot. We're going to go over how to properly identify what I personally saw on a multi-time frame perspective, so to say. So obviously, before this happened, this occurred, right? This very bullish trend. Now, this bullish trend, it took about 2 weeks to form. The market doesn't just trend forever, all right? The market has to retrace or reverse at a specific time. Why? Because if they keep going in that direction, retail traders are going to make a bunch of money, and that's not the goal for them. The goal is to take out the retail traders, to make them see what they want you to see, to get in your position, and then take you out of your position, take your money. So what did they create here? A very obvious uptrend. Here I have marked Sunday, Monday. Here is the previous day. The previous day would be Friday. This day would be Tuesday. And what I like to do here is just mark out the days of the week. This really helps me because I understand structure by, well, weekly structure and daily structure. And combining the two can give you hints into how the future might react or how price might react in a near future. So we have this, basically this entire week drawn up here. What do we see about this week that's so special? Well, Sunday, Monday, they basically consolidated all day, right? Sunday, Monday. Why? Because the next day, they were going to use this consolidation to manipulate the people that were trading inside of it. What do I mean by that? So let's say you're a retail trader using support and resistance as your main strategy, what are you most likely going to do? Place a support here, place a resistance here, and voila. There you have your strategy. Now combine it with a trend line or two, right? This would seem like a perfect sell opportunity. Why? Because, well, number one, it broke out of this trend line here. Number two, it broke out of this supposed major support. What, can I get some people in the chat to tell me what this is, what we call this, what we consider this to be right here? Stop hunt, trap, sellers, trap. Yes, thank you guys. Thank you, Nomad, Miles, Yohan. You guys are the best. Yo, induction, that's exactly what it is. It has a lot of names, but it's the same thing. It's a induction where retail traders are being induced to sell. Why? Because their confluences or their confirmations are being met, right? So what are the confirmations? I'll repeat them again. The trend line, the bottom trend line is being broke here. Boom. Now a major support that they have drawn here, why would they maybe draw that there? Well, maybe because the entire previous day and the half of the previous day, they took the entire day to make it look like that's a major support. So retail traders, what are they going to do? They're going to plot their major support line there. Anywhere in this place. Now, what happens afterwards? This is going to induce retail traders to sell. So let's extend this box out a little bit more to understand the sessions, because if we can understand all of this structure and everything is a real nice. However, we need to understand the structure, the sessions as well. Why? Because certain sessions have certain characteristics. The Asian session, for example, is known for its consolidation. Not all the time and not in every pair, but 80, 90% of the time, it stays in consolidation the entire London, Asian session, or at least 75% of it. So we can see Asian session right here coming to a beautiful consolidation. It's used as well to connect one day to the next. So you can see Asian session. Now, what happens after Asian session? We have London session. London session, its characteristic is a breakup, right? So what is it breaking out of? It's breaking out of this previous session where they created what looked like a support and resistance, right? London session, breakout. How do we know this is London session? Well, I have a really good tip for you guys. Click on this tool right here, this ruler, and hopefully you guys already know what this black line means. But if you don't, right click, go to settings, go to appearance, and go to session breaks. All right, this will enable these lines. This marks every 24-hour period. Now what I do is I click on the ruler and I go and I click on the black line starting the start of the day, and I go exactly 10 hours. Exactly 10 hours in is London session. Give me a second, you guys. I'll be right back in 1 second. All right, I'm back. So we got London session right here on this black line that we're going to mark right here. Exactly 10 hours after the previous black line that we marked right here, the start of the day. 10 hours into the start of the day is London session. So we can see exactly 2 candlesticks or 3 candlesticks before London session. What did they do? They induced that sell-off. They broke out of that range for Asian session consolidation. So here's that range. Here's that price range where price is acting, where price is consolidating. Now, this is all Asian session. We come to London session, breakout, induce the retail traders to sell. All right, this is that trap, you guys. This is exactly what you guys said, the trap, the induction. It has many names, but it's all the same thing. What happens after they trap these sellers? The market reverses. The market does a complete 360 opposite, 360 flip. There we go. And takes the money away from those retail traders that were induced to sell. This was a 100 pip move. This is what I like to call the Tuesday reversal. Why? Because, all right, like I said in the beginning of the session, the certain sessions have certain characteristics. Not only certain sessions, but certain days as well. Specific days have specific characteristics. Now, Sunday, Monday, one of the characteristics is that it just consolidates. Why? So that the next day, they can completely manipulate all the people that were trying to trade this consolidation. Now, this is known as the Tuesday reversal, the reversal before the midweek reversal. It happens off the lows or highs of Sunday, Monday. In this case, they manipulated off the lows of the previous day, Sunday, Monday. Now, from the low to the high was about 180 pips. How could we have judged this as a reversal right here, right in this between Wednesday and Thursday? How could we gotten in here? Well, let's take a look at the previous week, Friday. Something special happened on Friday. The market created the high of the week. This would be the high of the previous week, looking at this week right here. Now, let's go on a larger time frame to see what this actually looks like. This is why I like to combine different time frames, you guys, because using the 15-minute is great, and you can see the structure really nice. However, the 1 hour is a lot less messy, so to say. There's 4 times less candles. Here we can see the consolidation very easily, the manipulation, and this was just 4 candlesticks right here. This trap consisted of about 4 candlesticks. That's a 4-hour move, 4 hours to trap retail traders selling, and completely reverse. Now, come Wednesday, Thursday, they're making that high. Where do they manipulate off the high? They manipulate off the high of the previous week. Why? Because there's liquidity up there. Notice how they get to that point and they break out of it. Come back, break out of it. Come back, break out of it. Come back, break out of it. And they keep doing that, inducing that buy-off, inducing the bullish move. Yet, they know that they have to reverse because there's so many people that see this as an uptrend that the market has to reverse. The trend has become absolutely obvious. Not only that, but they're respecting so many different confluences, so many different confirmations that we're seeing here. Friday, they created the high. This is the high of the previous week. They work off the high of the previous week. Wednesday, Thursday. What do we expect Wednesday, Thursday? What is that characteristic? The characteristic is the midweek reversal. Now, it doesn't happen every week. However, if there wasn't a midweek reversal, it's very likely that there may have been a Tuesday reversal. And if it doesn't happen on the pair you're looking at, that's why we look at multiple pairs. Because if the reversal, either Tuesday reversal or midweek reversal, doesn't happen on the pair you're looking at, you can easily go and look at another pair and look for these characteristics. Look for these specific confirmations. Now, check this out. Wednesday, Thursday. Let's look at a 15-minute time frame. Look at this big, fat, green candle. Now, when I first started trading, I don't know about you guys, but I looked all over. Like I was completely clueless that this entire game was just set up, that the wool was being pulled over my eyes. I had no idea that there was actually like a group of I guess you could say, like, it's like a conspiracy that this is being done, right? And that we're being fed absolute bullshit. One of the most bullshit things that I was fed was that just look at the candlesticks. And if you see a big fat green candle like this, just buy. Now, you had to combine it obviously with a few other different confluences, like the breakout of a major support or resistance, or going with the trend. These are all things that retail traders use, and that maybe even you and I have used as retail traders as dumb money, and we were screwed over by it. How many people have gotten screwed over by this? I know I've been screwed over by it when I first started trading. I was literally told just to buy a big fat green candle. And the dude looked like he was a professional trader. Like he looked like he was actually making money just buying a big fat green candle like that. Like, yo, you've got to be kidding me. And the people believe it. Like, that's the worst part, that I believed it. Yo, I wanted the easy way out. There is no easy way out in Forex. You have to put the work in. I've seen a lot of my students, a student on Facebook commented, yo, I don't know, like, what's wrong. I'm not being profitable, but yet like I only study like once a week, twice a week. And I'm like, yo, bro, you got to study like hours a day if you want to do this. If you want to understand this, if you want to decipher the market, like it's a code, like it's a language, like as if you want to learn a new language. I speak, I'm fluent in Spanish. And sometimes it's even harder for me to be immersed in here in Costa Rica and, speaking Spanish 24/7 and then hop on a Zoom call like this and then just completely flip-flop and speak English. Like, even though English is my native language, sometimes like I get tongue twisters and stuff. So it's all about learning, you guys. Learning that Forex is so much more complex than we've been taught. It's not just buying a fat green candlestick. It's not just following the trend. It's not just, support and resistance. It's so much more than that. Yet we've been taught that it's just that. That it's just, follow the trend. Buy the breakout. How many people were buying the breakout here, right? All right, let me see what's going on in the chat. All right, some people said they can't hear the audio. Hopefully the audio is fixed. Audio is all right. Let me know if you guys can Can you hear me correctly? Hear me all right? All right, differentiate candlesticks on a multi-time frame perspective to determine your trade entry. Where would we get into this trade? Obviously, we're looking at the different characteristics. Wednesday, Thursday. We know that Wednesday, Thursday is the midweek reversal type setup. Now, personally, I don't know if I would have gotten in right here, because this is, I believe this was Asian session, somewhere around Asian session. However, the next day gave me an opportunity off the high of the day to get in. Asian session consolidation, breakout, and there's that M off the high of the day. And you can see how they spike off the high of the day. And if you didn't get a chance to get in here, they gave you one more chance right here. Let's look at how this looks like on a 15-minute versus the 1 hour time frame. What are retail traders thinking when they see this? Can I get something in the chat? Could I get someone to answer that? What are retail traders thinking when they see this? Let's say just this. You know, you can't really see that. What are retail traders? What's going on in the retail trader mind? This big fat green candlestick just broke the support, or no, resistance. And now what's happening? Yes, perfect. Actually, we got some awesome answers in here. Closing above resistance, consolidating on resistance, resistance turns support 100%. And not only that, but it's creating higher highs. Okay, this was the high of the previous day. What's a characteristic of an uptrend? High creating higher highs and higher highs. This was a high, this was a low, this was a high, this was a higher low, and this was even a higher high. This to the retail trader is a perfect uptrend. You see how they induce on a macro and micro basis. There's so many different inductions here. There's so many different confirmations being used for retail traders to get in, right? To continue, okay, they're going to continue this uptrend, right? Supposedly high or low, high, higher low. This was your opportunity to get in. How does this look on a 1 hour time frame? Again, why do we use a larger time frame for confirmations as well? Because you see how that big fat green candle was once a big fat green candle that closed way up here? On the 1 hour time frame, we can see that was a big fat wick. A massive wick. Just to trap retail traders in the wrong direction. There's also another confirmation here that I'd like to kind of give out. This was somewhat of a signature trade, breakout to the high and formation off the high and reverse. Those that can see it, can see it. Those that can't, maybe need a little bit more back testing. But it's funny that, you know, on the 15-minute time frame, even the candles were closing at higher highs, making higher highs. What do I mean by that? These candles here, the body of these candles closed here. The body of these candles closed here, making a higher high. Yet, if we look at a 1 hour time frame, it's way lower. It's always good to give yourself confirmations using different time frames, you guys. You know, if you don't see, if something doesn't look right on the 15-minute, wait. However long you need to wait, right? The max wait is 4 candlesticks for a new 1 hour candlestick to form, right? Does that make sense? Because if the 15-minute looks a little bit messy, all right, go into the 1 hour time frame and see how the 1 hour candlestick closes and wait for that as your confirmation. Which sessions present the best setups to give the most pips? I'm sure you guys already know that. It's either London session or New York session. Asian session, most of the time, like I mentioned, is just that consolidation. What would be your stop loss? CS asks, at the high, EU loves to keep stop hunting. Well, what I like to do is I like to first identify the major stop hunt. And if I can't get in on that major stop hunt, and how would I know that it's actually a major stop hunt, right? Well, there's different confirmations that we use. Where do stop hunts occur? Off the high or the low. And that can be in many different forms. Off the high or the low of the day, off the high or the low of the previous day, off the high or the low of the week, off the high or the low of the month, the previous week, right? These are all different confirmations to use and understand the stop hunt. How do we know that this is a stop hunt? Right here. Because they're stop hunting where? Off the high of this previous week. If we were to wait for this candlestick to close, this 1 hour candlestick, we could place our stop loss above the previous candlestick high. That would be about a 30 pip stop loss. And we know that, well, this is a massive, massive uptrend. If we can get in with a 30 pip stop loss, we're going to go for at least 100 pips. At least. Why? Because how many people were buying into this trend that they need to remove? How many people bought right here that needs to get stopped out? We're always putting ourselves in the shoes of the retail trader. Now, that doesn't mean we want to be a retail trader. We want to be in their shoes to understand what they're thinking at a specific time. What would a retail trader be thinking here? That it's going to go long, that price is going to go long. This green candle, this wick, was once a big fat green candle all the way up here. I'm sure there's people that actually bought right there as well. So my personal stop loss would be above the previous high. So if we waited for this candlestick to close, or any of these candles to close, you could get in. You could have waited the entire day. You could have waited after this stop hunt and waited until the next day, and they gave you so many different opportunities while keeping your stop loss at a good range, right? A 30 pip, 20, 30 pips to catch 100 plus pips. This move was 180 plus pips in about a day and a half. Total about 225 pips. CS asks when you decide to put your stop loss at break even. So in this case, we already placed our supposed support and resistance, right? These are going to be major support and resistance zones for retail traders. And we can maybe even plot another one right here. So it looks like, price respecting that zone. What I personally do is, let's say we got in here. Our stop loss is up here. Price drops and it's here. I wouldn't move my stop loss until price makes this move. Shifts completely out of its area that it was trapping in, right in here. Until that happens, I would not move my stop loss. And once it happens, that's when I would move it into break even. Basically risk-free trade from there on out. Joseph asks how to exit the trade. Well, we're looking for about 100 pips, 100 pip take profit. What we can do is we can use these support and resistance, that retail traders are perceiving as our zones of take profit. So where would we maybe want to put our take profit zones? Where do we think, because why do we have to understand this? Retail traders are going to believe, they're actually going to believe that if price breaks and comes to this invisible line that they have drawn on their chart, that it's possible that it just stays there and then continues up because it's apparently support, a major support in quotation marks, right? But what really happens is that price doesn't give a shit, right? Price does not care about your invisible line. Why? Because it has a mission. It just trapped how many people right up here for how many days? 2.5 days, 2 days, right? It has to move out of that zone to hit the stop losses. Where are retail traders going to have their stop losses? Right down here. Why? Because this is below a major support, apparently. Right down here, once again, because it's below a major support, apparently. And right down here, below here. Because why? Because it's below a major support again. So where would we place our take profit levels? We would place our take profit levels under those major support levels. This would be take profit. I wouldn't do this as take profit one. I would do it probably about a 80 pip take profit one. Not sure how many pips that is actually. Yeah, that's about a 80 pip take profit. Next would be right down here because it's below, once again, a major support. And see how these supports are broken so easily? It's like they're not even there. Why do they do this so fast? Because if you were buying anywhere in here and you just see these big fat red candles come out of nowhere, you're gonna get emotional. You're gonna go crazy. Because why? Because let's say you bought right here. You bought in here. You had a perfect entry in your opportunity, in your mind, right? You follow the trend, and then in 2 days, it wipes out everything you had in the previous week. Next would be right here. That's the next take profit zone. Why would that be the next take profit zone? Because you can see that's where price reacted. That's where price had one of those major support or perceived support and resistance zones. All right, all right. Let me check out Euro JPY. This was actually in May, April, May, start of May, June. We had 3 weeks in a row that were like absolutely perfect. Let me see if I can identify. Okay, this would be Sunday, Monday. Why would it be Sunday, Monday? Because this is a gap. So we know that is the opening of the market. This would be Friday. This would be Thursday, Wednesday, Tuesday, Sunday, Monday, Tuesday, Wednesday, all right, here it is. What do we see here? What is this considered? What do we call this in the Forexia family? What would this be right here, you guys? Sunday, Monday. Let me know if you guys can answer this in the chat. Ellen Page, yes, yes, yes. However, wasn't actually what I was referring to. Nomad, yes. However, not what I'm referring to. Johan, yes. Randy, yes. Shelton, yes. Yes. It is the induction where they induce retail traders to sell, going with the previous trend, the previous week's trend. We see major downtrend here. In macro, and then we see a little micro downtrend as well. This is Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. Yes, that is correct. The WTF trend, that's what we call it, the WTF. Why? Because that's what retail traders say to themselves after they realize they're completely screwed, after they see this candle. What a massive candle. So this is what we know as the induction trend. Now, this is funny. The previous, the previous week, what we previously looked at, marked up, was Sunday as well. And it was a very choppy, the characteristic of Sunday, Monday is the consolidation. Who would even want to trade that? But it's for a reason. Everything happens for a reason. Everything in the market happens for a reason as well. Sunday, Monday, Tuesday, Wednesday, look at this perfect trend. As if you could just sell right here and make money. That's what they want. That's what they want you to believe. Sunday, Monday, Tuesday is what we call the induction trend, where they continue with a lot of times with the previous trend. They just continue off of Friday, Thursday, Friday, Sunday, Monday, Tuesday, continue that induction, whichever way they're going in the market, either up or down, either bullish or bearish. In this case, a very bearish trend for 3 consecutive days, and then or actually a lot more than 3 consecutive days, but Sunday, Monday, Tuesday, it's a perfect 3 consecutive day trend right here. You can't miss that trend. How many retail traders were selling right in here? Because why? Because price is at that level. Well, that's what they're taught to do, to sell right in there. Sunday, Monday, Tuesday, if we looked at this and we were looking for an entry, we look for an entry on either Wednesday or Thursday. Sometimes Tuesday off of the high or the low of Sunday, Monday. However, in this case, didn't really present that opportunity. In Wednesday, however, let's look at these candlesticks. When did this occur? When did price break out of its consolidation, so to say, or give its induction? And where would that induction be? Well, this right here is Asian session consolidation. And this would be considered that breakout. The induction, now, we don't just go off of that, right? We got to understand the timing as well. So previously, we said 10 hours in is exactly London session. What is the next? After 5 hours after London session comes New York session. Exactly. So in New York session, what is another characteristic of New York session? London session may be the breakout. New York session, a lot of times, is the reversal. Exactly, Viju. Thank you, man. All right, we see the reversal right here. Clear as day, right? Right here. So this happens exactly 15 hours after this black line here. So we take our measurement tool and we draw 15 hours out, and this is exactly, this candlestick is created exactly at the opening of New York session. What do you know? So if you don't trade New York session, if you didn't get in there, they gave you another opportunity the next day. Once again, perfect Asian consolidation. And right here is exactly New York session. Once again, and we can see that W formation off the low of the day. That second leg coming in, New York session. And a complete reversal afterwards to complete that Thursday reversal or midweek scenario. Joseph asks which time frame we plot liquidity region. I would suggest, any time frame is good. I would suggest 1 hour, 15-minute, or 4 hour, or the daily time frame as well. It's good to have a macro perspective and plot. For example, in these zones where price reacts, plot that line there. Why? Not because you're going to use it for support and resistance, not because you're just going to buy or sell according to whatever price does to this line. No, because you're going to put yourselves in the retail trader world, into the shoes of the retail trader, and say, okay, if I was a retail trader here using dumb money tactics, using the BS that all these retail traders are taught to use, how would I take my trade? And understanding that, using that, you'll understand exactly how the market operates. Because that's all it is. It's dumb money versus smart money. Here we have Friday once again, the end of the week. Actually, this was a beautiful signature trade coming Friday. Now, Friday, Sunday, Monday, Tuesday, Wednesday. We don't really trade Friday. I personally don't. I personally don't really trade Sunday money either. And I'll trade Tuesday if it's working off the highs or lows of Sunday, Monday with the correct structure. However, what I like to do is wait for Wednesday, Thursday for that midweek reversal, or Tuesday for that Tuesday reversal. Now, in this case, we have a major downtrend. After 3.5 to 4 days of consecutive downtrending market, the bears basically took over. But what's important here is that it's becoming obvious, right? And not only is it becoming obvious, but it's becoming obvious at a certain time, right? It's not becoming obvious Friday. It didn't even start Friday. It didn't become obvious Sunday, Monday that it was a downtrend. It didn't even really become obvious Tuesday that it was a downtrend. Until we see this move here. And we can see the 2.5 to 3 days of market moving to the downside. Now, there was really no opportunities to get in here. A rejection off the trend line for retail traders or something like that. However, we can see that the trend has become obvious. And when did it become obvious? Just so happens That, what do you know? It's Wednesday, Thursday, Sunday, Monday, Tuesday, an obvious downtrend. What are the characteristics of this? Yes, market's creating lower lows and lower highs, and that induction trend. Now, come Wednesday, Thursday, Friday, that's when that reversal happens. That's when we can expect that reversal. Not all the time. However, judging market structure, that's how we tell whether the market will reverse or not. On a 15-minute time frame, it looks a little bit messy. On the 1 hour time frame, let's see how it looks. Looks a little bit better. All right, let me go over. I think we have about like 8 minutes left. So let me show you guys the one of the last things that I wanted to show you guys. Identify patterns in the market that can predict specific outcomes with major accuracy. What I'm going to show you guys is something that happens on micro and macro, because that's what I promised I would show you guys, micro and macro as well, the perspectives of it. So what I'm going to show you guys is right here. Let's just say this is Asian session. Asian session consolidation, London session breakout, and then comes New York session reversal off the low to end the day in consolidation. You guys can see how micro and macro apply. This same structure that we just seen here on Euro JPY 1 hour time frame, looking at the macro, you know, this was 3 weeks, 2.5 to 3 weeks here. What is this? Can somebody tell me what this is, what this structure is, and where we see it? Not just here, not just in macro. Yes, Wesley, it is a whipsaw. However, it is also, Matthias, yes, daily structure. Yo, and yes, Hegelian dialectic as well. Oh, man. What I wanted to show you guys was on Euro USD. I'm going to draw 2 rectangles. These 2 rectangles represent the Asian session consolidation, and these 2 lines represent a 24-hour period. Now, Asian session consists of mostly consolidation. Then comes the breakout of London and the reversal of New York to end the day in consolidation. So let's say, you know, I know you guys have seen me do this before. We just copy and paste this. This is how a trend is created. If you guys didn't know that, if there's anyone new here, this is how a trend is created. And it takes 3 days to create a trend. So Sunday, Monday, Tuesday, that's the induction trend. But why I'm showing you this is because this is a pattern that has different variations. It's the same characteristics, right, of consolidation, breakout, induction, reversal, yet it has so many different variations. Sometimes it'll break out to the low. Sometimes it'll look different than other days. But that's their job. Because after all, if the market did the same structure every single day, the same variation, everyone would understand it. Everyone would be able to see it. Now I'm going to show you guys something that not everyone is able to see because they don't understand market structure. I'm going to show you this exact same pattern here. And I'm going to be able to copy and paste it over and over and over. Because the market literally does the same thing over and over and over. However, just different variations. So we have this variation right here. Now the opposite of this variation would be a breakout to the downside and move to the upside. So we're going to use that as well. Be something like this, consolidation, breakout to the downside, and then move up. Consolidation. Okay. Ta-da! And there you have it. That is a trend, right? And that's how they create the trend. It's that easy, you guys. Understanding, okay, this is Asian session, this would be London session breakout, and this would be New York session reversal to end the day in consolidation for Asian session once again to start that entire cycle over again. Now, you can stretch it out a little bit. Here it is once again. Now, here is the same pattern, just inverse. You can see it right here. Consolidation, breakout to the downside. There it is. And how many times does this happen over and over again? Why is this happening? Because the market has a certain way to make a trend. A trend doesn't just come out of nothing, right? It's not like evolution. Okay, it's not like a trend can just be made out of nothing. It's not like the market can just go crazy and a trend will be made. In a sense, it can. I mean, if you don't understand the market at all, I'm sure that's how you see it. However, if you understand market structure, you understand the sessions, you understand the timing, you'll understand that, okay, there is a way that a trend is made. There's this underlying structure behind it, and this is it. And it's not going to be like this every single time. However, the characteristic, the basis is the same. It's the same characteristics. Maybe it's a different variation, just like this. This is the same. This is a completely different variation. However, it's the exact same concept. Alrighty, you guys. Hopefully you did enjoy the session. Let me know in the chat if you enjoyed. You'd like to see some more. I do plan on doing a lot more live streams. I don't even know when the next live stream is. I think it's like 2 days or so. But feel free to go to forexia.net/public-live-streams. And here you can see all the upcoming streams that we have. This one is June 25th, 2020. I don't know if you guys could see that, but yes, June 25th, 2020. In just a few days, we have another live stream at 10:30 a.m. So if you guys did enjoy this one, this will not be uploaded to the Academy. Well, it may be uploaded to the Academy, but I was thinking about uploading it to YouTube. So if you guys did enjoy, say hello to YouTube as well. And yes, that's basically it for today, you guys. Until the next one, like I said, we have another public live stream on June 25th at 10:30 a.m. and at forexia.net/public-live-streams. You can see a lot more of the scheduled content. So thank you guys once again for tuning in. Love and respect to you as well, Johan. Thank you guys. Until the next one, have a great rest of your day. Peace out, you guys. Thank you. Thank you.